Good afternoon, my people. What is going on? It is your main man, Charles Tank Harris, the Chief Visionary Officer and founder of the financial literacy platform Wealth Our Way, where our motto is wealth is not only for the wealthy. I welcome each and every one of you to episode 182, Credit Card Concerns. But before we get into today's material, I got to practice the attitude of gratitude and say thank you, thank you, thank you. I'm going to lose the glasses. The glare is killing me. Thank you, thank you, thank you to each and every one of you who are here with me live as I stream across the Wealth Our Way Facebook page and the Wealth Our Way Network YouTube page. I also want to give the Wild Nation salute to the many members of Wealth Our Way Nation who will watch this program pre-recorded overnight, over the weekend, wherever they can squeeze 15 minutes of financial literacy in, and then a heartfelt how are you to the good folks on the Life 101 platform who listen to the audio of this very here recording. Check it out. We are growing on all of our social media platforms organically and slowly, and I appreciate that. Anybody who can tell a friend about what they learn here, free of all charges, no gimmicks to get you to sign up for classes or pay for things, just free financial literacy, which leads to financial comprehension, which leads to financial growth. Please follow all of our social media handles. On Instagram, we are at Wealth Our Way. On Facebook, we are Wealth Our Way. And at YouTube, we are Wealth Our Way Network. Please subscribe, follow, tell a friend. So, I believe it's official. We've been talking recession for a very long time. And those of you who are familiar with the program, who have come listen to your man, Big Tank, you guys know I have been predicting rising interest rates, supply chain issues, market corrections, and a recession since early last year. I told you what we were on our way to. Everything, and I'm not one of those doom and gloom prognosticators who always say there's going to be a problem with the hopes that eventually they're right. I'm a pretty optimistic cat, but the tea leaves were readable. They were very, I didn't even need to be as smart as I am to know this was coming. But it's funny to me that because so many people make money on telling people how to get rich, they don't want to say negative things. They want to say positive things because you don't want to scare people from getting involved and taking your course or thinking they're going to lose money. So you always tell them everything is great. I am free from that burden here. I don't sign you guys up to go invest and do various things. I'm here to tell you the straight truth when it comes to finances. What's the movie Ghost when Whoopi Goldberg was being the madam, the teller, said, "We's in trouble, girl." Like, it's getting deep right now in these streets. One of the things that I want to talk about over the next few episodes on 15 Minutes of Finance are how to use credit cards properly. I see a lot of talk in these internet streets on going out and getting credit, then buying a building, getting tenants. I could go on and on and on about that advice and whether I think it's proper advice, whether I think it's harmful or reckless, whether I think it's for you. The reality is that credit cards can be a very, very helpful tool if properly utilized. Credit cards can be very dangerous if you don't know what you're doing. Credit is not income. Credit is not you're getting wealthier because you're taking on credit. You are taking on debt when you use a credit card. But there is a proper way to take on debt. There is a proper way to utilize it so that it grows your net worth. But right now, today, I'm going to talk about something for people who already have credit cards that they need to be aware of and hopefully give some advice on how to prevent what I'm about to speak on from happening to you. So it is a historical fact. It happens over and over again every time there is a recession or an economic downturn or a financial pullback in the markets that banks and other credit issuers review their portfolio. One of the things that I hope you're getting to learn on 15 Minutes of Finance and the Financial Power Hour is why things happen, not just what is happening. So when credit is issued, when you get a credit card, when you get a loan, there's somebody on the other end of that who hopes you pay it back. They've underwritten you. They've made a determination that you are worthy of this credit. They've extended the credit to you, and they hope you pay them back. Every dollar that they have open, every credit card that's walking around with their name on it is a risk for them. It is a risk that this person may spend the money and not give it back to the bank. As a result of that, when we get into economic situations like we are currently in, banks really get strict on their economic policies. Banks are constantly reviewing their economic policy to make sure their portfolio sits inside of the risk guidelines that they want to sit inside of. When it gets thick like it is now, they make sudden and instant changes. And the key is they do not let you know about it ahead of time, nor do they have to ask your permission. One of the major ways that banks keep an eye on their risk and lower their risk profile is by reducing credit card limits. So, giving you an example, you have that Capital One Quicksilver card, and you have a $3,500 credit limit, and you're doing all of the right things. You're listening to 15 Minutes of Finance. You never spend more than 30% on that card. You try not to even keep a balance, but for the most part, you never spend over $1,000 on the card because you know 30% is $1,050, and you want to stay under that. So you're managing your credit well. You're doing your part. You go to bed and wake up the next day, and Capital One has cut your credit limit from $3,500 to $2,000. Completely legal, not having to notify you ahead of time. It's just a practice that they're able to do. What does that do to you? Well, the very first thing it does to you is it lowers your ability to have available credit. Now, what I'm about to say next is quote unquote advanced financial practices. This is something that I do. This is not something that I'm telling you to do. When I have clients and they fall in various ranges, some of my clients, this is what we do. It's part of my process of BUD, best use of a dollar. You've probably heard, if you listen here or other places, that you should have an emergency fund, liquidity available to somewhere between 3 to 6 months of your expenses. Well, as a person who understands how money is made, I, Charles Tank Harris, I'm going to keep telling you this is for me, I don't like to have what I call idle or dead money. I don't like money sitting in accounts that is not earning me money. So I don't normally keep 6 times my monthly expenses in a checking account, money market account, or savings account. Sometimes I do, but for the most part, I don't. Most of the time for me, my emergency cash is sitting on the books inside of my whole life insurance policies as cash value that I can get to. And it's also sitting in my sock drawer in the form of credit cards. So my current credit card limit, when you add all my cards together, it's not even that high, as high as people can get. Mine, I told you I'm rebuilding from when I got divorced in 2015 and had to file bankruptcy to protect my assets. So my credit profile today, I have $70,000 in available credit card funds. I also have roughly $60,000 in cash value inside of my life insurance policies. That $130,000, I'm pretty confident that I can cover 6 months of expenses if something came up and I had no access to income from anywhere else. That is Armageddon for me. That is the worst case scenario, but I have it. If the credit card companies, if I went to bed with $70,000 of purchasing power in my credit cards and woke up with $40,000 of purchasing power, that would lower my ability to meet that capital reserve that I want to have on hand. So the banks are very much in control of my emergency fund. But like I said, that's something that I'm comfortable doing, not something I recommend for you. With that being said, the first thing it does when they lower your credit limits is it lowers your purchasing power, takes away your ability to be liquid. The second thing it does is even more damaging than the first thing, in my opinion. It could mess up your credit. We know that a large part of your credit score is based on how you properly utilize your credit limits, staying under 30%, preferably under 10%. Well, going back to that Capital One example, you had a limit of $3,500. You went to bed with a balance of $1,000. You're using a little less than 30%, like 28, 29%. But then they cut your limit to $2,000. When you wake up, you're at a 50% utilization rate. Your credit score is going down and you did absolutely nothing wrong. Very, very much something to be aware of. So not going to give you all the gloom and the doom and not give you some ideas on how to prevent this. Let me start by saying it's unpreventable. There's a possibility this can happen to any of us, but here's a way to make you not one of the top people that it happens to. Way number one, always pay your credit card bills on time. Remember, this process is happening from the banks because they're trying to lower their risk. They're trying to make sure they get their money back if something goes wrong. They know that you're having tough economic times because of the downturn. They don't want to be a victim of your tough times. If you're paying them back on time, you say to them, you're not somebody they need to worry about so much. Thing two, and this is going to sound counterintuitive, use the credit card. Credit card companies are in business of making money, and they make money by charging annual fees. They make money by charging the merchant a percent for being able to take their card, and they make money when you carry a balance and pay them interest. If you're like me and you have 11 credit cards in your sock drawer that you never use, they're looking at those credit cards and saying, these cards aren't making me any money. Why not cut this dude's limit in half? So right now, I personally, as Charles Tank Harris, am making a conscious effort to put something on every card. Even if it's $15, I use it for gas, or I put a recurring charge that I have in my life on here. I'm putting something on every credit card right now to keep it active so that they don't slash my limits. Because once they slash your limit, it takes a minute to get it back up, even when economic times turn back positive. It's a pain in the butt. You don't want it to happen. I don't like to do that. I don't like to keep all of these cards active because truthfully, it's a lot to manage. I keep, my main Dundada cards with me that I know I need, and the rest of them, I leave them in the drawer. But in this day and age, I'm putting a little something on each card to keep it active. So the credit card company says, oh, don't cut Big Tank. He uses us. So paying on time, keeping your card active. The third thing is don't apply for new credit. New credit applications tell the credit card company that you need money, that something's going on, that you're a little desperate. And when you apply for new credit cards, their first thing is, well, he already got our card. She already has our card. Why is she dipping over there trying to find something new? Let's lower our exposure. So make sure during these times that you follow those 3 tips. Keep your cards active, keep them paid on time, and don't be out here in these financial streets looking for new credit. These 3 tips should help you. They won't guarantee that you'll avoid getting your credit limit slashed, but they should help you. If you happen to get your limit slashed anyway, reach out to your credit card carrier. Let them know that you're a responsible user of the card. Like for me, I tell my credit card companies why I don't keep a balance on them and why I'm a good risk for them, and why when it is time for me to buy something, I have them in my drawer ready to use. Conversations, because a lot of these things that happen with credit cards are done through a computer and an algorithm. They're not people making these decisions. There's a program sweeping through data and making a decision. Get on the phone, talk to a person, argue your case. So with that being said, I hope these credit card streets don't burn you up and you don't get in no accidents. I'm going to be talking about good things about credit cards, probably for the next 2 sessions. I got some things that I want to share with you guys. There's no financial power hour this week, but I will be back on Thursday with 15 minutes of finance. I wish you all a blessed and happy Tuesday. And remember, wealth is not only for the wealthy. Have a great day.